All right, welcome to the first live stream Q&A session with the time sine wave analysis team. This is a father and son team. I'm obviously the son. This is my father.
Hello.
We're going to be talking about some basics of time sine wave analysis and going over a couple historical charts and then making our way through to today's charts. So to begin, we'd like to focus on this here, which is, well, I'll let him explain it. So what is this? What are we looking at right now?
Well, this is a circle, basic circle showing 360 degrees. Now, if you're wondering why that is, the answer is that all navigation regarding the globe or on any round planet anywhere in the solar system is all based upon a circle of 360 degrees. If you think of the planet Jupiter, Jupiter is about 1,000 times larger than Earth. But if you put a circle around Jupiter, it doesn't matter how large the object is. The principle is that if you make one fixed line, like a line of longitude and a line of latitude, you can navigate to any point on the planet. So this same principle of making a perfect circle is what's been applied to time in the market. For the Dow 30 stocks, I make a perfect circle of time. So let me briefly explain that. In the latest article about my story and the truth about time, I show you where time comes from. Time is separated from the intrinsic value of an option, which, as you know, is the distance a stock is above or beneath a strike level. And most options contain distance and time, or intrinsic value in time. So over 30 years, I did all kinds of tests to test about whether or not one could navigate using just the intrinsic value. One could navigate using the intrinsic value and the time value in an option, or whether time value. And the experience has proven out that time gives you the navigation possibility to know where a stock is, not distance. In other words, distance value has nothing at all to do with the stock. So there are 30 stocks in the Dow 30. I make a perfect circle out of time of that with the three major time cycles. And then what happens is time every 3 months begins at 450 degrees and runs down to 225. That is the mathematical principle of what's involved here. So time has to run down, and we have a circle of 360 degrees, 180 degrees you see at the center. That's equivalent to the equator of time in the market. Now, this idea is very simple. If you think of the Earth and you think of the equator, you can correlate the 180 degree mark to the equator. If from the equator you start to proceed north, you come to the point at which you are at 90 degrees north, which is what you see at the very top here. If you start at the equator and you go down, you reach the point where you are negative 90 degrees, or you are 90 degrees south. The instant you start taking another step beyond 90 degrees north or 90 degrees south, you're going back in the other direction. Now, this is the same principle as how time works in the market. A perfect circle is made of time, and time has to obey the parameters of a circle. It can't go beyond 90 degrees up or down. So in the next example, we're going to show you the real-time results. This is just one. This is the market bottom on March the 9th and the 10th of 2009, when I had a real-time signal wherein I knew absolutely certainly that the market could not go down any further and that time calculations were correct. And we're pointing right now where put time achieved 90 degrees exactly. And therefore the market had to go up. It couldn't go down any further because time is the constant that constrains the downward movement. The next one you're going to see is going to be the time sine wave. This is for June of this year.
This is from February 5th to March 27th, 2009. Let me adjust
Okay.
the image here for just a moment so
All
it's
right.
on the screen.
Now, this is backing out and giving you the big picture. To the left in the TSW compass chart, you can see where call and put time came to a perfect one-to-one equilibrium. And then the market starts down, and then in the center of this, you can see the arrow pointing, which we showed you before, where put time had hit exactly 90 degrees. It couldn't go any further down, and the market had to turn and go back up. And that is a real-time signal within about 10 to 15 minutes of the actual bottom. So now the other chart to look at before we take any questions, this is going to
I need
be...
to adjust this one as well. every
Yeah,
time.
okay. Do you have this one in June?
The latest
Yeah,
from
in June. The 90 degree
Sure.
bottom.
Let's
in
show
June.
this one real quick, and then
Okay.
we will go to the next one. It just takes a resizing with these.
September or October 2009. The maximum time value that time can achieve is 450 degrees. That's where time starts, and time runs down every 3 months. So here you can see we have a maximum time permanent market clock degree of 450 combined with a 0. When you hit a major angle in 0, the market has to turn. What's the next slide we've got?
We've got,
And,
this is leading up to this is leading up to the bottom after Brexit.
Okay.
Just adjusting again. Moment.
I think what date was this? Was this?
This is
June?
April 25th through
Yeah, but
June 16th,
The
and we
bottom
can go to
was-
the next one.
Yeah,
if
but
you,
the bottom was June the 9th?
yeah.
Yeah.
We can go to that right here.
Okay.
June
So-
27th, I think, was the bottom right here.
Right, so here you can see this is the bottom of this past in June. And if we look at the time sine wave chart, go to the left, you can see that this is 90 degrees on the time sine wave chart. That's the maximum that time can be above the straight line of time depreciation. And I describe this in detail in the book available freely on the website. It's the section where I talk about the deck of cards, the deck of 52 cards. And of course, the whole market had come down to a 1-to-1 on the compass. You can see right there, there's the 1-to-1, and there's the 90 degrees. And this is the point at which we went long because we knew the market had to reverse on pure time calculations based upon the circle.
Here's an image from some of the trades we made based upon that. We purchased 5 contracts at $4 a piece. The 182 call on expiring July 16th. On the 27th of June, we bought another 1 contract at $4. Expire at the 188 August 5th. And that was on the 28th. And then we sold those 5 we had bought on the 27th on the 30th for $40 each. So on the next slide, I think you will see the graphical representation of these. And maybe the one after this. And this is further trades we made on that up move from the bottom. As you can see here, we bought 10 contracts calls at the 183.5 on the 7th of July. Sold them for $17 each on the 8th of July. And then we bought 10 contracts at $25 a piece at the 183.5, expiring July 16th on the 11th of July. Sold them for $60 a piece on the 13th of July. And then also sold that one that we bought at the 188 for $4. That we bought for $4. We sold it at 27 on the 13th. Here we go with the as we actually had this in our one of our blog posts that showed the trades we made on the chart itself so that you can get a sense of where we bought and sold on those moves. So as you can see, this is where we bought the 188 down here at $4. We sold that 188 up here at $24. We bought the 183.5 for 7 here, sold it for 17 here, bought the 25 right here, and sold it for 60 right here, right before we sold the 188s, right there. So it was basically money all the way up, which is can't imagine that's easy to do for a lot of people. Moving on to the next slide. Here's some more purchases. These are just more. We actually purchased on the SPY on the 20th of July, as you can see, at 72. We bought 10 contracts at 72 a piece, and we sold them at 105 a piece about an hour later. And the graph of that is here. This is where it was purchased here on it was the 20th, and sold it here on the same day.
So let me summarize in very basic terms what this is all about and what has been proven. What has been proven is that time is the only constant in the market. We use time from options to establish a one-to-one relationship, and then we follow forward the movement of time, starting from the one-to-one and ending at a one-to-one time equilibrium. There is no considerations whatsoever about any other qualities or characteristics. We don't care about news. We don't care about earnings, because we have proven in 30 years that that has absolutely nothing to do with the movement of stocks or the market. It's purely moved by time calculations, time which obeys the laws of physics, motion going from a one-to-one to a one-to-one, and on the permanent clock upon which one navigates on a globe or a planet or any circle or any map. And that's all there is to it. I know that's a very simplistic statement. Our charts do not look conventional in any way, and one should be glad that they don't. This is a pioneering research study. I'm primarily myself a scientist. I have a university level degree in chemistry, and of course that involved university level courses in mathematics and physics. And I decided to apply that to the market, and then eventually, after a couple of decades, I figured out that only time is the constant. We'll just use time, make it into a circle, and you're looking at the results of that.
Okay. That being said, what are we looking at right here, right now? We're looking at a chart of the Dow Jones Industrial Average between the dates of June 21st and July 27th this year. So we can see the bottom that occurred on the 27th, 28th, and we can see that the Dow has pretty much flatlined for the last two trade weeks.
Yeah, just about. And we really haven't had either a long or a short signal since that. I just want to go back briefly to where the one-to-one is to the left here, which is at the bottom, and say a little bit about that and how this relates to the laws of physics. If you think about the Earth revolving around the sun, there is something in physics called centripetal force. In other words, if you were to put a ball on a string and swing it around from your hand, the ball eventually achieves what's called equilibrium. Equilibrium means all the forces are at balance. For example, the Earth, think of the Earth on a string orbiting around the sun. The speed of the Earth wanting to throw itself out and away from the sun, that force of the Earth moving around, wanting to throw itself away from the sun, is equal to the gravitational force of the sun that holds the Earth. The two are in a one-to-one relationship, and therefore this is why the Earth rather uniformly makes an orbit around the sun, is because, and it comes to the same point every year, It's because the pull of the sun's gravity and the pull of the Earth's speed away from the sun are at a 1-to-1 equilibrium. And here you see on time calculations, you see where the market comes down, and now the forces of the up in time and down time have come to a perfect equilibrium. The market starts out, and then the equilibrium is upset. And at some future point, it will come back down and establish a 1-to-1. And it moves back and forth from the 1-to-1 to being out of balance to being in balance. And these 1-to-1 equilibriums on time are all measured in real time and demonstrate the law of physics and equilibrium.
And what are we looking at for the last couple trade days here? What kind of signal are we looking for on the sheet for whether or not this is going a little further up or whether or not we've reached a temporary top and we're going to see a short move?
Well, still as of yet, we don't have a genuine, what we call a top signal. If we go to the time sine waves analysis chart, you'll see where at the very top of the market so far, you'll follow that line straight down. We had a couple touches on zero, and that was around the 405. The 405 is a major angle on the permanent market clock. And that was an indication, it just touched it. That was an indication of a zero, and a major angle, and a top. But nothing significant has really happened since then. So we're still waiting to have time either break above or for time to break down to a 1-to-1 to give either a long signal or a short signal. Right now, we really don't have it either way, so we're waiting.
So to sum that up, we're looking for a top for a bottom signal. We're looking for call time here and put time here to come to a 1-to-1, somewhere probably around the 202.5, or between there and the 225,
approximately.
And that would signal a bottom and followed by a long move. But
Right.
if we're looking at a top, a further top, what would we be looking for there?
They should
the
go
157.5.
The blue line on time should go above the 247, and the red line, the red time line should go beneath 157.
Would we be looking for anything on the time sine wave or the permanent market clock in addition to that?
If it's going to be a top, it should be another close to zero.
Okay.
And if it's going to be a bottom, it should go plus, probably to a plus 45 or more to go to a bottom and a 1-to-1.
So
and then another long.
We'd see a 1-to-1 with a 45 on a bottom,
Approximately, yeah.
and we'd see them cross the 247.5 and the 157.5.
And that could be,
and
if it
hit a
was
zero.
a zero, then that would be a top.
Okay.
We're still in between either signal.
And is there anything about the permanent market clock we'd be looking for?
Well, they could go, if they make a 1-to-1 bottom, it's possible they could either go back to the 427.50 on a 1-to-1 or back to the 450 and a 1-to-1. Either way, whichever major time would be growing, and of course that's going the wrong way, as I discussed in the book. Time has to run down. But if they go down to a 1-to-1 and time grows to the 427 or the 450, that tells us absolutely 100% probability we're looking at another long.
Excellent. Okay. And once we get one of those signals, we will be buying the appropriate calls or puts. We don't do straddles primarily because straddles are for people who don't know which direction it's going. And if we get the signal, we know which direction it has to go. Therefore, buying a straddle is a literal waste of money, because if we know it's hit a bottom and it has to go long, there's no sense in buying a put. We just buy straight calls. So at this point, we've talked about the basics of understanding the charts in the most simplest form, and so you can get an idea for what you're looking at. And we've gone over the Dow, the major bottom in 2009, and the bottom from after Brexit, as people like to call it, and what we see happening with the Dow in the coming days. We're looking for a signal either way. Right now, it's kind of in a middle ground. Following that, though, we can go over some stocks and specific examples over stocks. If you're here in the chat, go ahead and type in that the options that you have to look at some stock charts are going to be Amazon, Googl, PCLN, and we'll stick with those. For those, we'll go with those three right now. We have other charts we could go over, but between one of those three, let us know which one you want to look at. We have charts going back for Amazon about 3 months, Googl going back until December of 2015, and PCLN the same. So when we can go over any of those you'd like. So we'll wait a moment here, see if you let us know which one you want to look at. If you don't have a preference, we'll just pick one ourselves and go with it.
So let me, for the viewers, let me summarize what this is about. This is about the application of science and the laws of motion, the laws of physics, applied to time in the market. It's strictly a scientific endeavor. There's no considerations for anything conventional whatsoever. It's purely scientific. And you're looking at the cumulative results now of a total research project that spans more than 3 decades.
All right, just a moment here. We will get the chart up. We have a question. Let's see what that question is. And I'm just opening up the PCLN chart here, just a moment. Okay, so we have a question. Do we have a target price as opposed to direction? How would a finite value be determined? Are you talking about a target price on PCLN specifically? Because we can quickly work our way through some points here starting in December and come through to the present on PCLN. If you're asking for a target price on PCLN at the moment, we can get to that and we can talk about if we have one looking at the chart. But we'll quickly go over PCLN starting in December and talk about why certain moves were made at certain points. So looking at this, what do we see? Oh, we see that April over here has time growth on this up move with PCLN and grows back over what we call its starting value. Okay, how the starting value is determined and its specific value, we're not going to divulge. That's proprietary, but know that it's an important value.
What we can say for PCLN is there are 3 time cycles. PCLN is in the JAJ-JO time cycle. That means January, April, July, October. J-JO. That's where options really historically begin and where options end. All the other in-between options that are sold are not the true time cycle. So you'll have to start time calculations at each true time cycle. And we start PCLN at 15 points per side. 15 points for put time, which is blue. 15 points for call time, which is red. And the rule is that time begins at a 1-to-1, achieves a point of rest, and returns back to a 1-to-1. Now, for the longer haul, an option cycle actually lasts for 9 months, despite whatever you've read. I've started this research 30 years ago and proven this. So we begin a option time cycle for PCLN at a 1-to-1 at 15 points on a side. We follow that time cycle forward in time, and we know as we get into the last 60 days of expiration for that time cycle, PCLN has to finish that time cycle at a 1-to-1. And that tells us which direction the stock has to move to achieve the 1-to-1. The other thing we look for is what's called time growth. When time is growing in a time cycle, it's going the wrong way. Time has to run down. So if you look at the bottom chart there for April, the April compass to the bottom left, you'll see how the blue line comes above the starting time value, goes down, touches, goes down, and then crosses above, which coordinates with the rise in PCLN's price. And now we know that it has to go down because it has to end at a 1-to-1 time cycle, and there it is. There's the 1-to-1 equilibrium ending for April.
Now, what was it about April? Why were we looking at April instead of January or July?
Well, because looking at the date of the top of the chart, we see this is December 3rd through the 31st. The next time cycle to expire, of course, is going to be January. But we look and we see January's already at a 1-to-1. So that time cycle is over with. So then we go out to the next time cycle, which is April. April expiring in approximately 3 months' time. And April has to go to a 1-to-1, and there we see the 1-to-1 arriving. If you look then above that, you will see the furthest out time cycle in the compass, which is July. And July is not yet, we see red above blue. At this time frame of December to December 31st, we already know in advance, looking down the road into 2016, that the price of Pcln is at the top here, is not high enough to go to a 1-to-1. So when we get into January and April, and if Pcln is at this price now, we know already in advance that July has to finish at a 1-to-1, red time has to come down to meet blue, and we know that the stock will have to be moved up to make that 1-to-1.
All right. Well, let's move on then. Let's go to January.
Hopefully we answered that question.
He's asking
Oh,
the
a
target.
price target.
We'll get to that once we get to the July chart.
Well, I can talk about
So-
the price target. You see, we don't, it is time that tells the story of when a stock is at a high or a low. And time moving up and down is dynamic. Therefore, one cannot say with high precision as to what a target will be to achieve a 1-to-1. However, we know that when we get to a 1-to-1 for that time cycle, we know the stock price is where it should be. In other words, the stock moves based upon time. But an exact target you can't project. You wait till the chart tells you. You wait for the market and time to tell us when we're at a top, when we're at a bottom.
Are there moments though where we can, depending on how we have a way in which we choose our options, which is unique, and we're not going to necessarily go into that today or maybe ever. But aren't there times where we can look at where a cycle is in compared to where it should be based upon its depreciation schedule and what options we were using for these calculations, and get a sense of, well, this price might be a barrier for the movement and this price may not be?
Well, what we know is the following. The higher, for example, let's look at this whole down move here of Pcln and then refer down to the April compass. And you can see now as Pcln moves down, you can see the red line, which is call time, is moving up. And we know that this April time cycle, which is the next to expire after January, we know it has to go to a 1-to-1. We know that the stock price has to be moved back up for the red to come down and meet the blue line. That's the law of time law and the law of motion. So that tells us, already in advance, when we see it hitting, like you see the 2x, the 2SV here, and the 2SV here, we know these are low points and these are entry points based on pure time. And if you go over to the April total time, to the right at the very bottom, you'll see where time, with only 3 months left to go, time has returned right back to its total starting value of 30 points or 15 points on the side. We know that that is the wrong way. Time has grown and the stock has to reverse, and there you see the two reversals on Pcln. It hits once and then it comes back down and it crosses even further over total time value, starting value, And with 3 months left to go, how can it be that time has returned all the way back to its starting time value from 6 months ago? We know the stock has to reverse. That's the entry. Whatever the price is, the time calculations tell us now to be long.
And it wasn't just April we were looking at, was it? We were also taking into consideration October and July and the total compass.
Right.
And we see that call time is far above put time on the total compass as well and rises back to MV.
Yeah, you can see now from the April compass at the same time to the right, I'm sorry, total time. At the same time that April was coming back to the starting time value, you look above and you see July also came back to its starting time value. This is violations of the time law. And the bonus is the maximum total time allowable for Pcln is 90 points. So another guidepost that told us on time calculations that we knew we were at a bottom price at those two lows of Pcln was what I just discussed prior, and the fact that total time popped over the 90 points, the maximum time value, and it was long, and it did that twice, and there was the move from there.
And when you see that on the second time it came to it, it actually didn't even go as far up as it did before. That this was a hard barrier for that move on time,
Right.
and that it had to reverse there. It could not go any further, correct?
Right, that's right. So again, by holding starting time value as a constant, we now have a fixed reference. It's just like when you're driving a car, how do you know how fast you're going? Well, the constant is your miles per hour or feet per second. If you're going 60 miles an hour, you're going 88 feet per second. Here, by holding time as a constant, like measuring in a yardstick, 3 feet, time is a constant, time cannot grow. Time has to finish at a 1-to-1 time equilibrium. This is what tells us whether or not a stock is at a high or a low, or whether or not it's in the middle. It's time to buy or to sell.
All right. Let's move quicker through here. Just to go through these a bit here, just nice and quick. So here's February. Now that you've got the basics here, we think, of what we're looking at when we look at these charts. Let's look at what happened here with Pcln. So we see that.
Yeah, but first let's look at the time frame. It's February of 2016. So look at the low area to the left on Pcln's price chart. Okay. Now let's just look down very casually at the 4 compass charts. The total compass is the sum of all 3 cycles. And what do we observe? We observe red over blue, which means that the 1-to-1 will lie up. Pcln from this point has to reverse. Then we go down to July. What do we see? Red's above blue. The stock has to go up. What do we see in October compass? Red is above blue. It has to go up to get to a 1-to-1. And the next cycle to expire is April. So here we see April is, again, red above of blue. So in all 4 charts, we have quadruple confirmation that time has grown on this down move. We're at turning points of twice the time value. You look over to the right on the total time charts, and you see that in all 4, time has grown over maximum. It's grown over the starting time value for July. The stock has to go up for April to finish at a 1-to-1. And now in the April chart, you can see here, April compass, bottom left, what did Pcln do? Did Pcln's time calculations obey the law of 1-to-1? It was going to expire in 2 months, and here you see Pcln, follow the price of it above. Pcln stock starts up and then it just gaps up because the law of motion says time has to go back to a 1-to-1 equilibrium, and there you can see it's pure time that tells the story and nothing else. There's no distractions with any noise about news or P&E ratios. This is pure mathematics at work. There's no hocus pocus whatsoever.
Quickly again, here's March on Pcln. We see the same principles being applied again in the observation. Only this time, we see that the roles have reversed. And put time is now above call time after April's closing. You go back, you look, here's April.
Yeah,
It closed at
April's
a 1 to
done
1. So now we're not looking at April anymore. We're focusing on October and July. And on that up move for October, we see that its put time grew way up and came up to the 4x SV, which grew total time all the way above double SV
Yeah, and
on that move.
Go back. That happened because we know that April has to finish at a 1 to 1. So in the process of taking Pcln up, the time in October was taken far above, twice as high as its starting time value. So we already know at this point it has to go back down. And there she goes.
Yes, absolutely. As we can see, October grows far above double SV, and we get a reversal at that point. Also, we see that July, which is after April, the next to expire, has call time over put time, and its call time's up at the half SV, and it should already be below that at this point. So it makes a move down like it should, towards a close to a 1 to 1, but
Touches
not
a
just
1 to
barely
1.
touches.
It touches.
But this half SV peak, that jump there, signaled a bottom territory, especially when we see that October spiked up at the exact same time and hit its double SV. Okay, and after that we saw a long move to bring July closer to a 1 to 1.
Yeah. You have the next
Yes.
cycle chart.
We can move on quickly
Okay,
to this.
so then
Here's April. We'll go to
We'll go back to April. You had it there.
here's April.
Okay, so now we're looking, April is now expired, and you see that Pcln starts up. And why does Pcln start back up from that low? And the answer is then April is expired. The next time cycle to expire is July. What do we know? July has to finish at a 1 to 1 time equilibrium because that's where it started 8 months ago. So this up move you see in Pcln takes July to its 1 to 1 finishing time value. And then if you look ahead to October, what do we see? We can see that October has come up too high. Right there in the October total time to the right, second chart up from the bottom. And now we already know in advance that as we come online into October, Pcln will have to come down. Okay.
And it did just that.
And there you see
On
now,
May.
here you see from the upper left in the Pcln price chart, what happened. The stock came right down and started to get October into its ending starting shoot of a 1 to 1 time equilibrium. But in doing that, January cycle, now we have red over blue.
Same with July. July separated on that move, and call time grew back at the quarter value yet again, which indicated that after that down move, we had a further up move to occur after that to bring July back down towards a 1 to 1 again because it had moved away from it.
So to summarize, time value starts at a 1 to 1 time equilibrium, and in the last 90 to 60 days, that time cycle has to be returned to a 1 to 1 time equilibrium, which balances everything out. And when we know in the last 90 days, if red is above blue, stock has to go up. If blue is above red in that expiring time cycle, stock has to go down. It's actually very straightforward.
And here we had this chart actually in our first blog post showing the previous month, June on Pcln, and the bottom which we caught because we saw a huge spike in call time on July, which July should have already basically been done with, but that major move down indicated that it had to then go up from there because of that.
And in taking, if you look at the upper right there to the Pcln price chart, you see that very quick move down to that point right there. So when you look down, we understand why that occurred. You go down to the October time chart, and what do we see? Aha! October was taken to a 1 to 1, and in doing that, the July compass was taken above. And then, therefore, we know, and you go down further, you see January's red above blue. So it was taken down to achieve the October 1 to 1, And then they'll have to proceed up just a little bit in order to get July finished at a 1-to-1. Straightforward stuff.
And this is where we are as of today. And ever since we witnessed Pcln, I think it was about right here, we said that Pcln was now short overall, because we saw October's total time grow above the starting value. We saw it get back up near its 3x starting value, which it had not been. It had been there in the previous month and bounced off of it, and that had been a barrier for it for at least a month. And because we're so far into October's cycle already, there's no reason for it to be exceeding that 3x value anymore. Am I correct?
Well, or October has to finish at a 1-to-1. And now, how is it going to get to a 1-to-1?
Blue line has to come down to meet the red line.
Yeah, and what depends upon, of course, is where did it start? If the equilibrium lies up, what will happen is the blue line will fade down to the red line. We're yet to know exactly which way it's going to move. We need a little more time to determine which way the 1-to-1 lies. Does it lie up or does it lie down because it's in the middle?
Based upon the strikes that we've been observing with these, we've been sticking with, in our blog, we've been sticking with Pcln being short due to the fact that October's put time has to come down. It's getting too late in the cycle, and its total time is still up near starting value, which means we need to see a big dip to bring that down lower.
And the key to the one key that we use is we look at the furthest time cycle, and it's going to be April 17. If we look to the right on April's total time, it's the 1 to 3rd chart up from the bottom to the right. Notice that when Pcln popped up, time grew above the starting value. Time growth is a no-no. And you look right there, and we see now that on a slight down move, time grew. So exactly where it's going, we are not sure just yet. Because
time actually grew on the up move. If we look here, up move, up move,
well,
up move, right there.
yeah,
Time grew on the up move.
We're waiting for the pattern to finish for April to tell us what the direction is going to be to get a 1-to-1 for October.
I'm saying it's short, and I'm sticking with it.
It's not certain yet for October, but we'll see.
All right. We can go over some more charts if you'd like. If you have any other questions, please feel free to let us know. We're very willing to go over, I can talk about Googl. We have some Googl charts that are lined up and ready to go if you'd like to see those. We also have some Amazon.
Go to Google.
Yeah, we can go to Googl. Let's bring up Googl here. So, let's see here. All right. Here we have Googl from December 3rd to the 31st. We can, if that's too far back, we can just easily
go forward to another chart.
Move forward. January.
Here we go. This is good.
Yeah.
So now Googl, first of all, is to know what is the true time cycle for Googl. Googl's true options begin and end in the months of March, June, September, and December, which is different, of course, than Pcln. So MJSD, March, June, September, December. These are when its true options begin and end, meaning we'll know as those cycles are coming to expire in the last 60 days. We look at the time position of where they are, and we'll know which way the stock has to move so that the expiring time cycle will get to a 1-to-1. So this is going into January. The next time cycle to expire is going to be March. and then the next one would be June, and then September. And remember now, every time cycle has to finish at a 1-to-1, and we cannot have time growth. So if we go to the very bottom of the chart, we see that here's March. March is the next expiring cycle. It's got to finish at a 1-to-1. So what do we see? Let's go over to the right for total time on March, which is here. Googl came down, and when Googl came down, March's total time with just not even 2 months to run, returned right back up to its starting value from 7 months ago. See where the time here touches the starting time value? We knew on this alone that for March to finish at a 1-to-1, the stock had to go up because that's the time law.
Now, this is one of those moments where we see put time over call time, but the stock's not heading down as put time comes down, the stock's heading up. That has to do specifically with the options we have chosen for our cycles, because this is all based on options. We're not going to say which options we chose for each cycle, but that's based upon option values.
And based upon the time value only in that option,
Yes.
not intrinsic, not distance. That has nothing to do with it.
So we knew that because Googl was at a certain price level, that put was going to behave in an opposite way than it would usually. So this let us know why the put was behaving that way and why it was growing on the down move. But the moment we saw March hit that starting value, that late in the cycle, that what we knew automatically that is a long signal. It's a hard long signal. And as you can see, Googl made in the next several trade days, it made a 50-point move, 60-point move.
So this is an example of the time law. Time must run down. Time cannot grow. And when you see time grow, that tells us absolutely that it's going the wrong way and it's going to have to be reversed to get the next cycle to a 1-to-1. And there's what the March chart shows. It came back all the way up to its starting time value of 20 points, where it started 9 months ago, 8 months ago, the wrong way. It's going to be a long, and there's the result. And again, I emphasize this is just mathematics. It's just very simple mathematics. It's the science of basic math on time calculations with the laws of physics. There's no noise. There's no nonsense. There's no considerations for anything happening in the world whatsoever. It's strictly the physics, and you can see how physics is explaining the movement of the stock.
Joseph says, as a young engineer working in biotech, the science of your literature interests me exceedingly. The World Wide Web has been rough on you, gentlemen. Thank you for this. Yeah, people are not exactly the most friendly on the internet when they see our content. We've had issues with moderators on Reddit and such, basically saying that we're trying to, scam people, or that we're lying, or that because it is impossible to do what we're doing, we must be fraudulent, and that is sad. That's based upon people have certain preconceived notions of what it is to analyze the market and what is qualified and what isn't.
Each one of these charts, each individual chart constitutes more than 30,000 data points gathered from real time. It is impossible to fake this. I think what the issue is here is the following. Perhaps an awful lot, or the vast majority of people, do not have a science background like you do. And lacking the science background, they really don't have a feel for how the real world works. And therefore, they're in a position, and I say this kindly, they're in a position of ignorance. They're unaware, and they're unaware of being unaware. They don't know, and they don't know they don't know. And the other aspect is that if they've had an interest in the markets, they've exposed themselves to a plethora, a cornucopia of all kinds of erroneous information that has nothing to do with science and nothing to do with what really explains cause and effect. And really, we're we're seeing the results of this widespread ignorance and lack of a science background in understanding what we're doing. I appreciate your astute comment. Thank you.
We have another question. So we're asked, for forward charting through time, are values manually entered daily following market close, meaning real time is once daily? No. Real time for us is we are collecting data real time
And
on these stocks and options from a data service provider.
Yeah, you're looking at real time calculations on call time and put time.
Yes.
This is it, real time.
Absolutely, yes. There's really nothing that's manually recalculated on a daily basis. There are minor little adjustments to resetting our sheet every day that we do after close or before the open the following day, but those have little to do, if anything at all, with calculations. It just as a matter of saving the file under a new name for a new day, really. We have a period of time every month that we do pick new options as the ones that were born 9 months prior expire, so those are no longer available, so we have to manually go through those and decide which options to pick and which ones to use. But outside of that, there isn't a whole lot of manual entry, really. That's it.
Yeah, these calculations are all done automatically, and when a time cycle expires, the next time cycle is born or starts 9 months away. So we now start that at a 1-to-1. If you go back to that one in April, so the gentleman or the questioner can see where one cycle ended and the new one began. April, wasn't it April?
We're looking at
there we go.
September.
So yeah, there's September. Here you can see where in the second chart to the left up, the December compass expired down at a 1-to-1. And then on the third Friday of the month, the new time cycle, 9 months out, September begins, and it begins at a 1-to-1, put time, call time. And then we simply follow that forward in time. One cycle ends at a 1-to-1, the next cycle starts at a 1-to-1, and we simply follow them forward in time.
We have someone who's curious about July 20th when we made that trade where we did the $300 in an hour. What prompted the intraday trade? We'll go back to the Dow chart in a few minutes here. Quickly, we'll end with that. But we want to quickly go through Googl here because it's a stock we've been talking about on a semi-regular basis, if not every time in our blog. And we want to just quickly get to the point where we're looking at where Googl is now and what's going on. So as you can see, we've got charts here going through the months. We already talked about June in our blog. You can go to our blog, take a look at what in our first big blog post about Googl and why that was a bottom and how we were able to call that bottom. And now, looking at today in our last blog post, we said that Googl would continue to be up. I think we made our blog post around here, up, but not by much, because we see that September compass, correct, already came to a 1-to-1, and that was to us a safe exit on that long move, because when this occurred, we also saw March grow above its starting value. We saw the total time come and touch the half market value, as we see actually happen today and yesterday. They reached it. So we're looking at really strong top territory if you look in combination with December getting very close to that 1-to-1, and that's early for December to be coming to a 1-to-1.
It is. So September at this date and time is the next cycle to expire for Googl, and you can see it's at a 1-to-1 on the compass. So it right there, 1-to-1. There we go. Now we can see that December's time cycle compass down below is also almost at a 1-to-1. So both of these are very close to their ending value by the law of motion. And most important, if we go to the March total time chart, you will see that March started at 20 points on the side, and total time for March is almost back up at its total starting time of 20 points. And this tells us we are very close to a top on Googl.
Would you say it would be a time where it may be a safe bet to to buy some puts that expire a month out, a couple strikes from the money, and just hold them and wait for that down move which is coming?
Well, let's look now. We can see that again on the laws of motion, starting at a 1-to-1, ending at a 1-to-1. September is there, December is almost there. But what do we see in March? We have blue above red. Tells us that the next move to get March to a 1-to-1 is down. And just as the blue line went up, the stock has to come down. And when you look at total time in March, we're almost at SV, or the starting time. No, not total time. March, right there. When that gets to, if and when it gets to 20 points plus, this is going to be a short position on Googl. That's simple.
And we will definitely be sure to put that in a blog post if we make a purchase. And if we we see that happen during in the middle of a day, we will try and get that out in a tweet and get that information out there. Is there any reason you look at the Dow Jones Industrial instead of SPX for overall market direction? That's because, as we touched upon earlier, and also in a blog post, the Dow Jones Industrial Average has 30 stocks, and we have to pick options, specific options, for each of those 30 stocks for our calculations on the Dow and having the compass on the Dow. So that's a call time, put time for all 30. So that's 60 options. If that's two per stock. The SPX is 500 stocks. That would be 1,000 options, and these options are only available for us to get from Friday at 6 p.m. on expiration day until Sunday at like midnight. We don't have the time to get 1,000 options. That would just be a huge labor-intensive endeavor. So, because the SPX and the Dow Jones Industrial Average move so closely together, we're able to use the Dow Jones Industrial Average as a way of also trading in SPY and whatnot.
The reason for tracking the Dow using the same principles of starting each time cycle at a 1-to-1 is substantially proof of concept, to show that it is whether what is true for the Dow and is true for the individual stocks. Now, there are certain times when we absolutely know 100% probability when the Dow is at a bottom, such as the 90 degrees. And those opportunities don't come along all that often, but one must be patient to wait until they do, because when those 90-degree bottoms come along, for example, or the 450s or the zeros, those are the opportunities in which you can take a position and know with high probability of success, because the circle cannot be violated.
We got another question. Why do the TSWA charts differ between the Dow Jones Industrial Average versus individual stocks, as in two columns in the stocks and one column in the Dow Jones Industrial Average?
Yeah, I can answer that. Actually, I also track the individual time cycles of all the time cycles involved in the Dow. For example, in the Dow, there are 3 JJO time cycles. Currently running is October, January, and April of 2017. And currently running is September, December, and March. And then also currently running is August, November, and February into the next year. So that's a total of 9 time cycles. We're not yet displaying all those compasses in those charts. We think it's a little bit much for a person to take a look at. That's something we might do in the future, but we do track and we do graph all the time cycles of the Dow 30 with all 30 stocks, and we may get to that at some point in time. But what the reason for tracking that is to prove whether or not the 1-to-1 time equilibriums also hold true for the Dow 30, and I can tell you right now that they do.
Keep your questions coming. Feel free. We'll stay here and keep answering them for a little bit more here. We will get back to the why we made that day trade on the 20th. We'll make that the final thing we go over. We just want to go over one more stock here that we've been talking about lately, a big one that's made quite a few big moves recently. Give me just a moment to get that ready. It's going to be Amazon. I'm sure a lot of people, maybe not everyone, was surprised by what happened on Prime Day with Amazon moving down, but we weren't surprised at all, and you will see in a moment just why it didn't surprise us that Amazon made a move down on that day. Just a moment here. Okay. All right.
So why don't we start by talking about the October compass? If you look to the left of the price chart of Amazon,
Would you like to go to June? Take a look at June, so they have an idea of where
well,
October came from.
this is fine. We can see that if you look at the time frame now, July here is expiring, and do we have July here? Oh, there it is.
This is July.
There's July at the very bottom
July
left.
at the bottom is closed
You can
out.
see that July is already at a 1-to-1. So now we're looking in the other charts to see, well, where's it going to go next? Well, when they came down to bring July to a 1-to-1 to the upper left on Pcln, what do we see? October time grew.
Amazon.
No, lower left.
We're looking at Amazon, just so.
Yeah, I'm sorry, Amazon, lower left.
Yep.
Go to October's compass. And what do we see at the left bottom price? That time had returned back to a starting time value in October, which said, okay, October expires next, and they need to go up to get it towards a 1-to-1. And of course, that's exactly what happened. And when they got it up there, what did we see about January? When they took it up to take away, to move October toward a 1-to-1, the January compass rose back up to, what is that, 3 times its starting time value. Time grew, it violated the time law, Amazon needed to come down, and there's the down move. Once again, this is pure mathematics based on the movement of the laws of physics. And if you can review the 3 laws of physics, you know that the first law says that something in motion stays in motion unless stays at rest unless activated by another force. And here we see, again, the result of these laws apply to time calculations only, and these time calculations prove that the laws of motion and the time law of time growth are proving out that these are the cause and effect of the movement of stocks. And the nice thing about this is it's purely rational, and it's making decisions based upon mathematics, not on anything else.
Looking at this, what would you say we're looking at here for the movement of Amazon? We said in our latest blog post that Amazon was looking like October put time could rise back to its half SV, which it has,
Okay.
risen back to, which has taken the stock back down, along with January's put time moving down due to being far too high in its cycle.
First of all, I start out by looking at where total time is. Are we within the maximum total time value? The answer is yes. The next thing I look at is, okay, what's the time frame? We're looking at July. July has already expired by the 27th. What's the next time cycle to expire? It's October. October has to go to a 1-to-1. We look at the high price of Amazon down to the lower price in the move. Which way is Amazon moving and which way is time going for October? And the answer is Amazon is moving down in order to get the October time cycle to a 1-to-1, so the blue line will come down and meet the red line.
Are you sure that's what we're looking at? Time flatlining here at October on the down move, and on the up move we're seeing October move further down. So we're looking for October to move down to take Amazon up for a 1-to-1. And the distance between the call and put is so small that it allows, I would say, Amazon can go back up here to bring October to a 1-to-1, which will bring January back up a little bit, but not too much, because October's already so
Right.
close to a 1 to
Right.
1.
Well, the next time cycle to expire is going to be
October.
well, after October is going to be January.
It's going to be January, yes.
So when October finishes out, we should have and total time will tell us. You see total time in April, you can see at that last top, it started to grow above. That's a no-no. So we have to watch now at this point what April's time is doing and whether or not it's growing. If in a down move, April's time grows above the starting time value, the stock should reverse. If the stock is going down and it grows, it'll go up. If the stock is going up and April's time returns back to its starting value, it'll be down. So what determines the next future move is going to be April and it's going to be January, and we're watching that right now.
And we're observing this because October expires in, what is it, a little under 80 days?
No, less than about 60 trade days.
60 trade days, yes. So October has to come to a 1 to 1 before then.
And it's getting
it's pretty
there,
close already.
but not quite.
So we can easily see at this point, I would say, in my estimation, we can see an up move in Amazon that will bring October closer to a 1 to 1. But that up move is now restricted by January and April's time growth. January cannot be growing much more in time. It's already still above its starting value in total time.
This is a little bit of an in-between because they're in between. We have to wait to make a call on this until we see how October finishes out and then the position of January and total time for April. So right now, we're not saying definitively. We think because of the strikes we picked that the move is going to be up to finish October's 1 to 1, but we're going to wait for that to come.
Okay. We can move over to the
Okay.
July 20th trade. We have a question, but I'd like him to clarify that question. What exactly? He says, lastly, can you speak about the polarity change with GS from short to long? GS was initially analyzed as short. Yeah, we can go over that. Sure, absolutely. Let's look here. Open up GS, bring up July. Let me just grab this. That looks pretty good. Okay, yeah. GS. Here's GS. Now, looking at this, we thought that GS was originally, our thought was about here, that GS was going to be short. And our thinking on this was because we see January's put time crossover call time moving down as the stock goes up, and January's put time reversed at the starting value, and we went, okay, it's moving away from there, time's growing, which it should not be doing, and it's coming back to its starting value and reversing. And my first take on that was, well, this is a strong indicator that the stock has got to go down. But we took a second look on the third day, after the second day after that, so right here, when it did it again, and then they went further up. So it was at a lower point when it hit it the first time, and it was at a higher point when it hit it the second time. And based upon the strikes that we've chosen with these cycles, October started telling a different tale on this stock. And as you can see, it's flatlined at the 160. Okay, the 160 is an important value in one of these cycles. And because of that, we realized that if GS stays above the 160, okay, on its up moves, that will bring October's put time down. But if they break through the 160, October's put time is going to move down. Okay, that 160 is an important value, and October is the next to expire, so it needs to come down to a 1 to 1. So right now we are literally in a very middle ground. This could be broke. The time could break either way, in either direction, on this stock, and we're in a position right now where we're not exactly sure whether it's going to be a long or a short, because it's literally on the border. It could go long or short at any moment. So we'll be able to catch it in the day, but it needs to be more than half a point move over 160 or below it. It needs to be several points for us to go, no, okay, this is where October is going and why.
There was on the total compass a dead giveaway to the long, and that occurred right here. The total compass is the second one down from the left under the price of GS. Right here, when time broke above the 1-to-1 and put time started to, that was a long. And I've got charts going back 10 years that when this phenomenon occurs on the total compass, 1-to-1 breaks above, it's a long. So we missed that, but you know,
we're not perfect. We can't get everything all the time.
You reach a certain point where you almost go stir crazy.
Yeah.
And you have to stay to the principles of time growth and 1-to-1. What we do see here is, notice that we can say for sure that the April, which is the fourth April compass, the fourth chart down on the left right here, we had a 1-to-1 and it broke through that. And now we're seeing the little bounces here. This is too soon to tell exactly, but definitely October, which is expiring next, will need to come down to get to a 1-to-1.
Yeah,
it's a question of timing.
Well, I'm looking just now at GS and noticing also that April's total time is actually moving down as GS has moved down from that high around the 162.5, 163. So, you know, this could be a short move, but we're, like I said before, we're still in this middle ground. We're looking for a strong signal either way, and we don't have one yet. So we're not willing to take a. I'm still leaning that this is long, but like I said, this is in the middle territory. So I mean, we're not trying to be tricky or have it both ways. We're just saying, look, there's signals and there's no signals, and right now we're in a position where it's white noise. It's you don't want to buy a put or a call at this point because this could move either way. We need to see where the direction is going, and that 160 value is very important.
We need a solid signal here.
Yes.
It's not here just yet.
Exactly. So, if there's no more questions, we're going to go and take one more look at, because this is already getting to be about an hour and a half here. We're going to be posting this onto our blog, so feel free to share the blog post tonight, because it's just going to be this video for people to be able to, after we edit it, you know, for time, for people to watch. Could you speak more to how earnings do not play a factor? Say if Google jumps 5% tomorrow, it would be quite a jump at the top. Paul, you guys mentioned where it is now. Well, we did say about Google that Google can go a little bit up, but you just give us a moment. Let me bring Google back up so you can get a sense of what we were talking about here, because Google is at a barrier here on its values. So we're going to go to Google one more time here. We can always talk about this again. We're happy to have live streams. Wednesdays and Tuesdays are probably going to be the better days during the week for us to do these. Let me look to see if that looks good on the screen. That looks good. Okay, so here's Google. All right, we're going over Google again. So the reason we say that earnings and news reports and all of that, we don't look at that at all. And this is because this is all just pure math and calculations. And the earnings, from our perspective, have no effect whatsoever on what we're looking at here. Okay, because
let me say this: if earnings were a solid scientific indication of a move up or down, people would already be using that as a means to be on the right side of Google. It doesn't matter what stock you pick. I've proven that, you know, sometimes a stock does nothing when they have good earnings. Sometimes a stock goes up on good earnings. Sometimes it goes down. It's less than even a 50-50 probability. But I've proven that when these time charts hit, there's the move that's going to come. So, again, there's no regard for earnings at all. I don't even have to care about them. This is math. 2 plus 2 is 4, and that's just the way it is. If we go to the March total time, we see, now there you see right there, March started in June of this year on expiration day. It started at 20 points. Look what's happened. March's total time has dropped down, and now it's violating the time law, and it's growing back up to almost 20 points. And when it gets there, it's going to be short and down, and we don't give a darn what the earnings are, what the news is. There's no science behind any of the news or any of those things. There's no science behind P&E ratios. There's no science behind earnings. There's no science behind volume, because volume doesn't tell you how many are long, how many are short. Nothing. This is the only thing in 30 years that I know that proves cause and effects. It's the time law, the laws of motion, and only focusing on time calculations. So you'll have the opportunity to see if we're right. If March goes back up to SV, starting time value, we're going to call a short on Googl. And we've proven this already over and over again. It could be there now. It doesn't. There's not much left. It's going to be short, period.
Now, we're also looking at a short, because if you've gone through any of the collected writings, especially the book, which isn't very long, you can get through that in quite quickly. The basics are that time must run down, and as you see, and 1-to-1s on the compasses. And September has come to a 1-to-1, okay?
So
and
it's over
if
with.
you go through our Twitter, all right, you'll see that on the day that Googl came to a 1-to-1, we said, and in the blog, that this was a safe exit on the long, okay? And they've diddled around here. This stock has not moved much at all, okay? And there's no making money in options or trades here, okay? This is flatlining basically, okay? And we see that, like we talked about previously, we've seen put time growth in March, which has led to total time being back near starting value. Total compass has grown, which is bringing it back up to half MV. And December is closing in on a 1-to-1. Now, December does not expire for quite a while, so a 1-to-1 in December is most likely, okay, not going to stay that way. It's going to be a reversal, and we're going to see call time and put time separate, and that's going to be indicative of a top, period. They bring December to a 1-to-1. At the same time, they maybe just exceed March starting value, 21, 22. They peak it, okay, that gets peaked. That's a short, period. We don't care about earnings. We don't care about anything else. We don't read the news. We don't care about the futures. That's not it. We're looking at this data and how it's graphed. And this is just pure math and scientific study. There is no magic. There's no reading tea leaves. These are values that have been scientifically determined and monitored for years now. And so anyone who might say that, well, you're not rich and successful yet, well, we just started trading, okay? So that's something you need to set aside and look at. This has just been a labor of love for decades, and it has now gotten to the point where I myself have decided to get my father here to actually start getting involved in the actual trading aspect.
So I made the decision a long time ago. If you cannot make it better than a 50-50 game with math, you can't win. So there's no point in playing the game, because you're only going to lose. You can't react. You have to act on knowledge, and this is the knowledge we have to act on.
Okay, so we're just going to go to the Dow now, and we're going to quickly talk about that July 20th, and then we're going to bring this Q&A session to an end. It's been lots of fun. Let me bring that up for all of you. So just a moment. Let's see here. Go. You believe you wanted to know what it was on July 20th that got us to make that day trade. So let's adjust this so you can see everything properly. Just a moment here. All right, so We're looking at the June 16th through July 22nd. Okay, so 22nd is here. Looking at the 21st. All right, so this is the 20th right here. So right here, we were looking at how I actually was the one who made the decision to do the day trade. And my position and reasoning for it was that we were looking for, okay, the time sine wave, as you can see here, to make its way to 0. All right, and on the 20th, the time sine wave opened up much higher, actually close to 22 and a half, and at the same time, call time rose to the 180, okay, and put time came all the way back up to the 247 and a half. And because they hadn't hit 0 yet, my thinking was, this is a barrier because they haven't got to 0. They're not going to go much higher than 247 and 180 here. Time's going to have to come down. So I took a position on the SPY ETF, a call, 10 of them at $72 a piece, and just watched and waited for time to continue moving down. And when it got to a sufficient point where I felt like it was a safe exit, I believe that was somewhere here. It went a little further, but not too much. The option value increased not too much more. Once it got in between 180 and 157 and a half,
Middle ground.
right? I called that's middle ground. I went, it could go either way now. I could lose money, so I'm just going to take this and run. That was the thinking on that. It worked quite well, actually, but we're not really too comfortable with day trades because you can lose a lot in a day trade. It can go either way. Even if you're right on the overall move, in that day or the day after, time can move against you, and your option goes to nothing. So we based our trade for SPY call based on Dow Jones Industrial. Yes. So since the Dow and the S&P move very similarly on their tops and bottoms, not 1-to-1, but quite close. And I've been monitoring the SPY. Yes, we can use the Dow Jones to basically just make purchases on the SPY. It's been pretty well so far. So, and because I found someone helpful on Reddit said that trading on the SPY, you make more money faster than you do trading on the DIA, the Dow Jones Industrial ETF, because the spreads and the calls on the bid and ask are smaller and they move quicker because there's more volume. We'll be sticking with SPY for our market trades in the future. But with that, it's been a pleasure. We're going to bring this to a close. We will try and do another one of these when we can. We're going to take the time here to edit this down and get it up on our blog. Hope you've had a great time watching. You've learned something. It's inspired you a little bit, got you to think a little outside of the box. And we hope to see you guys again here. And feel free to follow us on Twitter, follow us on Facebook, subscribe to the YouTube. We will also, you can also make sure you sign up for our RSS on the website for our blog posts. And until next time, guys, you have a good one.